Hello, Mark Lowdy here. If you're a shareholder of the Singapore Exchange, you will have received this in the mail. It's the annual report, and you'll need to have read it, irrespective of whether you're going to the annual general meeting or not. In the next couple of minutes, I'll take you through some of the main points, but of course, as always, you should read the document yourself. In particular, here are some of the key statistics of the exchange. $1 trillion market in Singapore dollar terms, at least. 770 companies listed. It's the biggest market by market capitalization in Southeast Asia. We then come to the letter to shareholders presented by the chairman, Chu Choon Seng, former SIA chief, and Magnus Bocco, the current chief executive. And as letters to shareholders go, it is very concise. Just a couple of pages packed with facts about what the exchange has done and, to some extent, what it's going to do. There aren't any major items of guidance in there. Don't expect forward-looking numbers and things like that. But you can get a picture just by reading the letter to shareholders what the exchange has been up to and where it sees the growth opportunities. And there are lots of opportunities to grow. First of all, the retail investors. You are increasingly important to the exchange. The number of accounts that are active on a monthly basis is up by 1/3. That's retail accounts. And almost half of the volumes going through on the exchange were generated by retail investors. So that goes to show that the growth that the exchange has been looking for has in part been found locally. Another part of that growth is coming from derivatives. 28% of revenues now come from the derivatives market, a very substantial increase, and the total volumes traded up by 1/3. At the end of May, they even had one day where they had a record number of open contracts on that particular day, 29th of May. And with iron ore being one of the new products being traded on the derivatives market, goes to show how they're broadening out their product offering in terms of derivatives. In fact, the exchange also bought a 49% stake in the company that runs the electricity market in Singapore. So at some point, perhaps we can see a more active participation or more active number of products from the electricity market on the exchange. The bonds, this is how they performed. 424 bonds listed during the financial year. And apart from being more than last year, the other noteworthy part of this is that 90% of these bonds were issued by overseas issuers. So these are companies outside of Singapore that are using the SGX, true to its slogan of being the Asian gateway, to raise capital on the debt markets. And also, one other thing to point out about the letter to shareholders is perhaps some of those comments about where things are heading. So as I said, no specific numbers or forward-looking guidance, but there were a number of comments that as investors you might be interested in. First of all, the general direction for the economy, and that is that the uncertainty and volatility is likely to prevail in the near term. Again, no real specifics as to how that's going to impact the exchange, but in general, volatility is good for the exchange as people buy and sell more than perhaps when times are quieter. The outlook also includes this comment about the securities market, which I thought quite interesting. The fact that companies will be able to raise cash in multiple currencies. Apparently the securities market is ready for that, so perhaps more news to come on that front. And then this comment here about the internationalization of the renminbi. That's one opportunity that SGX is looking to tap, along with the fact that the ASEAN economies are also growing still. In fact, the ASEAN Economic Community officially kicks off at the end of 2015. So as ASEAN becomes a single investment destination and the various initiatives taken to form the economic community start to take hold, perhaps once again that'll be the next growth driver in the medium term at least for the Singapore Exchange. Speaking of ASEAN, the ASEAN link is up. It allows people in Singapore, Malaysia and Thailand to trade in each other's markets through an electronic link. There's no specific comments about how that link is going, but we do get this comment in the shareholders letter to shareholders, and that is that activities to better inform investors about the investment opportunities in other markets have begun. Now let's take a look at the numbers, and this bar chart perhaps bears out in particular the growth over the previous year. Revenue up by 10%, operating profit by 14%, and net profit up by 15% over last year. When you look at the revenue breakdown, you can also see where that growth in revenue is coming from. First, here is the ring chart, which shows the securities market making up 38% of revenues, derivatives there in green contributing 28%, and we have that magenta sliver, that's depository services, 13%, and issuer services there in orange or mango, contributing 9% of revenue. So again, securities still very important, but derivatives really picking up, as we're about to see. First, here are these blue bar charts which show you the securities market performance, and you can see that after a down year last year, it's kind of kicking back up again. The derivatives market, here is the growth story. Look at that, year-on-year increases from 2010 onwards. We have depository services continuing to grow, 94 million, obviously not quite as big as the other contributors, but still the bar charts are trending up. And last but not least, issuer services, relatively stable there at $65 million, with funds being raised through listings, corporate actions, and so on. The dividend is always of interest to retail investors, and this next set of bar charts will show you how the dividend has been tracking. The blue bars on top, particularly the one to watch, because the green bar at the bottom is quite consistent. That's the base dividend. But the blue bar, look at that. We've seen another kick up, 12 cents in variable dividend, making a total of 28 cents for 2013. So you can see, compared to the other bar charts, it's another leg up. What's interesting is the grey line at the top, because what that shows you is that as a percentage of profit, it's actually paying out slightly less. Now, it's still above the 80% limit that the exchange has set itself, 89%, still considerably above that. But, and it has to be said too, that in pure cash terms, they're paying out $171 million to shareholders. $171 million being returned to people like you. So you can see that there's still a lot of money going back to shareholders, but as a proportion of profit, it has come down slightly in line with the exchange's capital requirements. Here are a couple of other pieces of accounting for you accounting buffs. This is the cost-to-income ratio. In the last 5 years, it's been around 38-39%, going up to about 43%. So 42.1% is somewhere in the middle there. The amount of cash that the company has on the balance sheet is also very substantial. At $613 million, that's the highest, at least in the last 5 years, the numbers that they've given. At a time, too, that capital expenditure is at its lowest in the last 5 years. The exchange has also placed a great deal of emphasis during 2013 on sustainability. In other words, ensuring that companies act in a way that they have a long future ahead of them. And it's not just environmental issues, as the green leaves here on the sustainability report would have you believe. Sustainability goes a lot deeper than that, and I'd encourage you to read the exchange's own sustainability report for more details. For now, though, I've broken out just a couple of pieces of trivia that you might be interested in. The first is that they've actually increased the temperature in their offices by 1 degree. In other words, it's just slightly warmer in the office of the SGX on Shenton Way, and all of that in an effort to cut the amount of electricity used and obviously the amount of greenhouse gases produced. And then there's this other snippet that I found in the sustainability report relating to the move to Metropolis 2. About 7 in every 10 SGX employees will move to Buena Vista in 2014. 7 in every 10, they have about 500-600 employees. So you can see it's a large number of people that are moving out west. The Singapore Exchange, the SGX Centre, Centre 1, where the SGX is currently based, is costing them around $15.5 million in rent a year. And as you can see by that green box here that I've also managed to dig out of the annual report, they're going to spend almost $3 million in reinstating the offices that they are vacating at the SGX Centre to a state that they can then hand it back to the landlord. So they're not just moving out, they're going to spend $3 million just on reinstating the offices. Last but not least, here's one resolution that you'll be asked to vote for, or vote on at least, at the annual general meeting. It is whether or not to appoint this man as a director. He is Ng Kok Song, who's a former Chief Investment Officer at GIC, and interestingly also was previously chairman of SIMEX, the forerunner to the Singapore Exchange, back in the 1980s. So he will be up for nomination, and he will be one of the directors who you'll be voting on at the annual general meeting. Once again, make sure that you read the annual report for yourself before you go along, and see you at the AGM.